moving average, you know that is one of the more common ways to assess a trend, right? We know that there is a trend when we have a when the moving average has a good slope. Moving average are just trend indicators, so they are not worth to use when market is moving sideways. Yeah, at the end, a trend. This moving average is just a trend direction indicator that calculates a simple arithmetical average of prices for a specific period, right? Showing the average value of the price of a currency over a set value date. As you can see, we are seeing right now an euro dollar daily chart, sorry, and I have plotted 20 simple moving average with the red one. The only thing I plot right now, the fact is that this moving average is one of my favorites, and we are going to start with a bigger picture and go to smaller. But as you can see, all that I have told you just now is resolved in this chart. Yeah, as long as the moving average has a slope, okay, and the price is above that moving average, trend is bullish. When moving average starts turning flat, okay, market is sideways and it's giving me no certain information. When price is below the moving average and the moving average gains the bearish slope, price tends to go lower, right? So this is the first reading I get from a moving average. I will make the chart smaller, right? And you will see that it's pretty common to see that when pair is above, the trend continues rise, and when we turn flat, we see some consolidation, some sideways movements till we find a new way either up or down, right? But in general, in this daily chart, you can appreciate that as long as price is above moving average, we are bullish, and as long as we are below moving average, we are bearish. This is just a 20 simple one, right? There are several combinations and some moving average we can use to trade, okay? So the opportunities moving average gave us, right? This one at least is usually to tell us about the short-term trend because we have a 20 periods, right? I have set it to 20. It's a good idea to mix it, to combine it with a 50 periods one. Usually it's most common used in market, right? Let's do the 50 green, okay? And let's add the larger one, the all-time famous 200 simple. Okay, let's do it brown. Okay, so we have the different color sets there. So why do I plot two different moving average? You know that while the 50, the 20, sorry, first one is talking about short term. As more time, as longer is the moving average, as more numbers I add to the period I calculate, right? The most longer term I can see in the charts, right? So this particular case, 100 or 200 moving average, this 200, it's telling me what had happened over the last 200 days, right? So what I'm seeing right now in these euro-dollar daily charts, right? I'm seeing 200 crossing above the 50, right? I'm seeing the 20 also crossing above the 50 for several days before. In general, the 200 has a strong bullish slope supporting the trend that we have been seeing developing since the past 2 months, right? However, this daily chart and this information I'm seeing right now, it's not useful for intraday trade or crosses of moving average in this particular time frame or this particular length, right, are not the ones that are giving me the entry signals or trading probabilities. So for that kind of uses, I could use different settings of moving average, right? In fact, what I'm trying to say here is that we can use moving average either to determine a trend and make them work as non-support or resistance levels, or either as a trading strategy when we have seen crossing them. However, when we are talking about dailies or long-term charts, a cross of moving average, it will give me the signal quite late before the trend is already started, right? So I don't like this kind of setting or this kind of tool to try to determine where a trend is starting or ready to reverse or to find a bottom or a top, right?